Welcome back to another episode of Pulse on the Market. I apologize for the delay in the episodes, and I will be better trying to keep up with them daily. Sometimes I have classes early in the morning. It makes it difficult, but I'm your host, Jaden Vrains, founder of Vrains Capital. This is the show designed to help you guys stay in the loop with everything regarding the markets, crypto, stocks, whatever it be. I'm here to keep you guys updated on news especially. So it's been an interesting few days. So it's been up and down. We've had good days, bad days. And yesterday we saw a hot start to the market. And that was post meeting with the Fed, Jerome Powell. And it was bullish at first. And then things started creeping in. We saw that towards the end of the day, everything just dropped pretty dramatically. I mean, it went from up almost 1% to down like 1.5% across the board on the indexes. So everything was doing pretty bad. And this is attributed to concerns over a spike in the oil prices. So you guys have probably looked outside and saw the gas prices have been rising dramatically. And that's amid conflicts in Ukraine, Russia, that I believe Ukraine took out one of the refineries, oil refineries for Russia. And just stuff like this has been happening, and it caused the oil prices to spike. A lot of people think that Joe Biden does not want to get reelected because of these gas prices and inflation. So they're saying he doesn't want to. And the Fed, it's interesting because usually around this time of year, I'm not political in any way like that, but typically the interest rates are cut. They try to make the data look good going into the election so that a president can get reelected. But this is the first time in a while where the Fed can't cut the rates because inflation has not been showing a steady decline or just overall bullish data. So they're still holding off on the rate cuts. And this is what caused the market to turn around and to start dropping. Today, we're right back up. Would you look at that? This seems to be happening. I mean, we haven't had a long streak of bad days. It usually recovers pretty quickly. But it has broken off a little horizontal. We haven't seen much growth recently. And after we broke 5,000 in the S&P, it quickly shot up to 5,200. But now we're starting to see across the board, it's starting to plateau. And hopefully it doesn't reverse the other direction and start coming back down. The main concerning thing is the PE ratio of the S&P. So last time I checked, it was around 21, 22, where typically it's around 19 is like the average. And a lot of analysts are expecting, or they say that it should come down to around 20, which would be around 5 to 10% decrease in the indexes. So that would be a pretty huge pullback, I would say. But it might be necessary if this report coming up, this earnings season coming up, if it doesn't show a 4 to 5% growth in the earnings, then we could see a potential pullback in the market in general. All right, let's get into some news stories for today. So Apple layoffs. So Apple's laying off 614 workers in California. This is its first significant post-pandemic job cuts. So it's not a good look for companies when they have to lay people off. I remember back in the day when I read Shoe Dog, Phil Knight felt terrible for having to lay people off. He said we couldn't plan effectively enough in order to not lay people off. And it seems like Apple amidst a lot of stuff that's been happening in China and whatnot, sales decrease of the iPhones, and they're laying off people to become more effective. And so this will be effective May 27th, and it'll be across various offices in Santa Clara. Google is eyeing HubSpot, so Google's parent company Alphabet is reportedly considering a bid for HubSpot, which is an online marketing software firm. So they're valued at around $35 billion. And this potential acquisition, if pursued, would be Alphabet's largest acquisition ever. So $35 billion is a hefty price for a company like HubSpot. And so it would be their largest acquisition ever. That's kind of cool. And speaking of acquisitions, so J&J, which is Johnson & Johnson, so they're not looking to acquire, but they already acquired Shockwave Medical. So this is a $13.1 billion deal. So they're paying $335 a share, which is around a premium of 4.7%. So typically they don't buy the shares at the given stock price. It's usually at a slight premium. And so this one was 4.7% over the stock's closing price on Thursday. So that's what they acquired the company for. Okay. So Boeing, they compensated Alaska Air. So you guys remember when that happened, when the panel was missing 4 bolts. I don't remember the exact, I think it was 4 bolts, but it fell. It just got ripped off the plane, fell in a teacher's backyard, and caused havoc on the plane. And so apparently they compensated Alaska Airline with $160 million for losses due to a mid-air blowout incident for that incident that happened in January, and the subsequent grounding of planes. So $160 million just for a panel missing some bolts. So that's why they should have done detailed background checks and double checking everything to make sure things are good, because that is an expensive loss. 100%. It's a lot cheaper just to double check everything. All right. Sweet. McDonald's is reacquiring its 225 franchises in Israel from I don't know how to say this, Alanyal Limited. And so they're aiming to maintain its market presence and ensure positive experiences for employees and customers amid boycotts related to meal donations to the Israeli military. Yeah, that's not a good look, especially if you're rooting for the other side. And so McDonald's is buying back franchises. I didn't know they sold them off to Israel, but apparently they're buying them back. All right, let's see here. So Paramount Global, their stock has been dropping. They dropped by 8% on Thursday following reports of a potential merger with Skydance Media, for which Paramount would need to raise about $3 billion in equity. So, I mean, not every merger is a success, and it doesn't always look good. They would have to raise externally $3 billion in order to merge with Skydance Media. And so this caused their stock to slip by 8%. NVIDIA announced a $200 million AI center in Indonesia, so it's part of its Southeast Asia expansion. So they're basically enhancing local telecom infrastructure and digital talent. So that's pretty big news. They're expanding. NVIDIA, we're starting to see some cracks in NVIDIA. And currently the price is at $8.80. They're up 2.5% today, up $21 a share. And their stock just, okay, yeah. So recently it's been kind of flat. It's been up and down. Let's take a look at the day chart here. So yeah, we saw the highs of 960, 970, down to 850, up to 960, back down to 850, 860. So we've just seen it it's bubbling up and down right now, and we haven't seen any serious growth in either direction for NVIDIA. All right, back to my little news stories. Let's see, anything worth your guys' time? Oh, there's a new fund. So the Destiny Tech 100 fund, it's DXYZ is the ticker. It offers individual investors the opportunity to own shares in private tech companies like Stripe, SpaceX, OpenAI, Discord, companies that aren't public. So they're currently trading on the NYSE, which is the New York Stock Exchange. And this fund aims to democratize access to high growth startups. That's kind of cool. I can get behind that 100%. It's probably a slightly higher risk, but it has potential to have a big payout, and allows you to get into stuff like this where it's typically difficult to invest in private companies. So that's kind of cool. All right. Let's see, jobs report, which is a pretty solid indication of how the economy is doing. In March, employers added 303,000 jobs, marking the 39th consecutive month of job growth. So the unemployment rate fell to 3.8%, down from 3.9% in February, which is why we're seeing a solid day in the market today. So this report came out, and this is a good indication that the economy is doing well. If we're adding jobs, unemployment's falling, that's more circulation in the economy, and it is a good sign for the stock market as well. We like to see that. So the 10-year Treasury yield rose 7 basis points to 4.381 following a strong March jobs reports. So that's up. I saw that the 2-year was up quite dramatically. It's up to almost 5%, which is insane. All right, oil prices. U.S. crude oil price rose to $86.59 amid escalating Israel-Iran tensions and impacts from strikes on Russia oil infrastructure. So similar to what I was telling you guys earlier, is that Ukraine was doing some stuff, and also the Israeli-Iran tension. So this has caused oil prices to spike. And it's risen over $1 per gallon. Oh man. Yeah, $1 per gallon in gas. At least over here in Utah, it's been pretty bad. So gold is hitting all-time highs. They surpassed 2,300 on Thursday, and it could reach 2,600 within a year due to geopolitics, government spending, rising demand in Asia. So when there's high inflation, more stuff going on, it usually causes an influx in the price of gold, and it does well in environments such as this. All right, let's see if there's any upcoming earnings reports. So we got Delta reporting Wednesday, Constellation Brands Thursday, Fastenal Company Thursday, CarMax. So we're starting to see a few companies for this quarter coming up here. These are going to be the first ones, right? And but in around 2 weeks to 3 weeks, we're going to see an influx of the bigger companies start to report, and that's entertaining. I love this season, and it flies by way too quick too. So crypto has been plateauing slightly as well. They're also pretty flat. They haven't reached another all-time high, which is kind of surprising. But let's see here. Oops, I typed in the wrong one. Let's pull up Bitcoin. That's the major one right now. So Bitcoin is at 68,100. So over the last week, it's hit lows of around 64, 65. Now it's up to 68. It was previously up to 71,000 for the week, but yes, we've seen pretty intense fluctuation with cryptocurrency, and yes, the little altcoins that I'm invested in are also experiencing quite a variety of movement here, and yeah, so nothing too crazy, nothing too big. Once we hit the all-time high, I might liquidate my position because it typically drops right after, and then I'll buy back in. That could be very dumb because sometimes you don't want to lose a position in a stock, in a crypto, and whatever it be, and because sometimes it's very difficult to get back in because you want to get back in that perfect time, but it never happens, and then you miss out on a lot of potential gains, theoretical losses, but yeah, we'll play by ear. We'll see when that moment comes, though. All right, so just for some big losers, big winners on the day, we got biggest losers in the S&P. We got Enphase Energy, Paramount Global. These are down 5%, 6.8%. Tesla getting hammered again. They waived their cheap vehicle. I don't know if they should actually do that. So they were planning on making a Model 2 to compete with these the Chinese EVs. How they are very cheap, and Tesla wants to compete a little bit with that. But I think they should go for the high-end luxury style cars to make it an icon instead of going for the cheaper routes to compete with China. I don't know if that's the proper way to go about it, but hey, they might be a lot smarter than me over there at Tesla. But they did officially waive it off, and we'll see if they get back into that industry. Intel's also down 3%, Hershey down 1.6%. Biggest winners in the S&P, we got GE Aerospace up 4%, Intuitive Surgical 3%, ServiceNow 3%, AMD 3%. We got Amazon, Netflix, Meta, so pretty solid day for these bigger cap companies as well. And let's take a look at the Dow real quick. And we got Amazon, 3%, Caterpillar, Salesforce, Microsoft, American Express. They're all pretty good, 1.5 to 3%-ish. And yeah, Intel's the biggest loser for the Dow on the day, and McDonald's is down 1%. So nothing too crazy out of the Dow. And that's how it usually is. They're usually slower growth, lower beta stocks, so they don't usually rise as much as the market rises, right? But that is it for today. Once again, guys, reach out to me at marketpulse.io if you have any questions, comments, concerns. If you want me to dive into a stock or expound on a finance principle, you just let me know. And this show does not constitute financial, investment, legal advice whatsoever. And it's all risky. Do not make decisions just based off this podcast. Make sure you do your own research or seek the advice of qualified professionals. It's all risky. It could all go to zero. And I'm not responsible for any losses or damages taken based off the content of this podcast. This is all personal opinion on my part. And that'll be it. I love you guys. Thanks for listening. And I'll catch you guys tomorrow. Or have a great weekend. I'll catch you on Monday.